Hello everyone and welcome to Day Trader S&P 500. Today is Monday, September 18th, 2023. This is Dale Woodson, the editor of Woodson Wave Report newsletter and the YouTube channel Day Trader S&P 500. Let's get everyone caught up, our YouTube subscribers, with what our newsletter subscribers already have received. Let's start with the US10Yr here. We're looking at an hourly chart from that fourth wave low. Well, we've got two different counts, one in blue and one in black. The one in blue, we'll do that first. I don't know that I should put alternate on there anymore, but we've got a 1 up, a 2 down, a 3 up, a 4 down, and a 5 to complete the larger degree. Wave 1 with a circle around it. Wave 2 with a circle around it is down here at the 4.06%. And from there we had a shot up in what would be 1 of 3 and 2 of 3. And you can see 3 of 3 gains equality at 4.514% in the blue wave count. So it's in a third of third wave in the blue wave count. And in the black wave count, we've got a 1 down, a 2 up, and then another one, a 1 up and a 2 down, I'm sorry. And in that one, wave 3 of that degree of trend in the black gains equality at 4.433%, which it almost touched. The message is the same in both wave counts. It's in a third of third wave, depending on what degree of trend. One's larger than the other. But the bottom line is the message is the same. Higher rates for longer. Because again, the 39-year bear market in rates ended in 2020, and we're only 2 or 3 years into a probably 39-year bull market in rates, okay? But anyway, the break of this 4.362% wave 1 high was the key, okay? And that happened over the weekend on Friday/Sunday when the rates opened up for trading, okay? So off to the races we go. All right, let's look at the S&P cash. We're looking at a daily chart, and we've got a Fibonacci time zone, which we haven't shown very often, but this Fibonacci time zone from the July 27th high shows a 1 right here in blue at the bottom, a 1 on August 18th, and then the 1.618 in the time zone would target September 1st, bang, a direct hit there, and the 2.618 targets September 26th. So as you know, our time spiral is looking for a turn date. Looks like it's setting up as a low on September 20th, and this is looking at a turn date or a low on September 26th. So we've got a window there between the 20th and the 26th for this third wave here to make a low, unless this September 1st high is broken. On the cash, our targets for wave 3, it gains a 1.000 relationship, or 1-to-1, at 42.70, a 1.272 at 41.96, a 1.414 at 41.58, and a 1.618 at 41.02. That's the S&P cash. That's a daily chart. We can get into the E-mini futures. Same thing, different prices. This is a December contract. Again, we've got the 1 at August 18th, and we've got the 1.618 at September 1st. And again, this shows next target date of September 26th, and those target prices in the December E-mini futures, 43.10 is the 1.0, the 1.272 is 42.32, the 1.414 is 41.91, and the 1.618 in terms of price is 41.32, and that's the 2.618 time zone, if you will. Okay, let's get into the, that was the daily. Let's look at the hourly. Here we've got that wave 2 high on September 1st. We have 5 waves down for 1, and then we have a wave 2 up, okay? We've had these triggers since last week. We had a downside trigger and an upside trigger. The upside trigger was this 43.50 high, and it went above it, as you can see here. And so it hit our 618. It made a 45.62 high on Thursday. We were out of the office on Friday. On Friday, it made a minimal 4 points higher wave 2 right there at 45.66, okay, on Friday. And you can see the third wave collapse began from that second wave high. Okay, so if we've got a 1 down here from 9-1 to 9-7 and a 2 up here into Friday 9-14, wave 3 targets here. I'll get them all into play. If I can make that a little bigger, there we go. I got them written out here, but 3 gains equality with 1 at 44.51.25, and that has to trigger. Okay, got to get below that 44.83 1/4 for that trigger. Targets, red trigger, these targets, black trigger was those red targets, and it hit between the 618 and the 786. Okay, again, wave 3, 45, or you can see them 44.51 1/4, 44.20 1/4, 44.04, and 43.80.50 for the 1618. Okay, again, a move down there brings these targets into play, and it won't go straight down there. Again, we'll have waves. You know, it looks like we got a 1, 2, 3, 4, possibly 5, and a retracement there. I think if we can look at that from the 914 high, see, because this is the hourly. There's the 9-1, and then we've got a 1 down. There's that ABC 3-way correction, and here is from that 914 high at 45.66. Again, that made just 4 points higher right there from Thursday to Friday, and then the collapse began. If this is a completed 5-wave pattern, and that's up to debate, but if it is, here's our retracement targets before the next huge wave down begins, and it's 45.17 1/4, 45.26.50, 45.35.75, and the 0.786 is 45.49 1/4. Again, this 45.66 should hold. Okay, so break below here opens the door, the down trap door. Okay, let's look at some of these. Get you guys caught up what we sent out to our subscribers here. This was back on Thursday, the market close report, out of the office on Friday, returning Monday. There was the upside trigger activated and the target achieved. Okay, and that's where it hit that 45.62. You can see here's that time spiral on the bottom of this hourly chart. Okay, we got 818 direct hit within a day. The same on 9-1, and this one points to 920 Fibonacci days out. So we'll see how that plays out. Again, our time frame is September 20 to 26. Those were the targets when the high was 45.62. On Friday, it made a slightly higher high again at 4 points, so those targets will change. I think I have that in there. I want to show you guys what we were putting out. That was a bigger degree of trend upside trigger, okay? But the smaller degree of trend target was hit, and the upside target was achieved, and it sat between the 618 and the 786, and on Friday it went to 45.62. But we were saying, this is important, the upside potential is limited at best, while downside risk remains great. The downside trigger is still in play with the updated wave 3 targets below. That was our Thursday report. Let me get you guys to our report that we sent out pre-market open today, and that is not it. My apologies. Let me see if I have that. There it is. Okay, let me get up there to the top, make sure. Yep, pre-market open this morning, Monday morning, and you can see there's the wave 3 down. There's the 45.66, slightly higher wave 2. There's the wave 3 targets, 44.51 1/4, 44.20 1/4, 44.04, and 43.80. Since this is a third of third wave, as long as this wave 2 holds and this wave 2 holds, it'll most likely at least gain a 1.618, the third of third wave at 43.80. Again, we need to see a break of this downside trigger right there, 44.83 1/4 on 9.7, to bring these targets into play. Okay, the upside target trigger was achieved, and upside targets between the 618 and 786 were achieved. So I think that's about it. You know, again, we restated downside risk is great, upside potential is limited, and yeah, the Friday's price action proved it. It moved up by 4 points, and you saw how far down it went. You can see on the chart there. I don't think I have anything else for you guys. There's that Fibonacci time zone, if you will. Okay, and let's get back to our charts here, and I think this shows it the best here from that 9-1 high there. Okay, 1 down, 2 up, and here's our 3 targets, and there's that 44.83 and a quarter trigger. Need to move below there to bring these targets into play. All right, that gets us all up to date. Thank you guys, and until next time, take care, everyone.